All right, welcome back to another edition of Chart of the Month. It is February 2026. I hope everyone is doing well and your new year is off to a great start. Wanted to take some time today to take a look at a really interesting chart I came across when going through the guide to the market. Um, Again, the Mag 7 and the biggest names in the market have been generating all of the headlines. And so, what I wanted to do was came across this chart and thought it was a really interesting talking point in how if we go back to 1985, how the different dynamics of the largest 10 companies in the S&P 500 have changed throughout the year. In looking at this chart, we can take a couple different things away from it. So as you can see, each individual company is color coordinated by their decade, but also we can see total market cap and then the concentration of that market cap. So if we go back to 1985, the 10 biggest companies were DuPont, Kodak, Royal Dutch, Amoco, Shell Oil, AT&T, General Motors, GE, Exxon, and IBM. And so we all know those names very well. And a lot of those names were in certain areas of business. So oil and gas were big, huge conglomerates back in 85. Not a lot of tech because, again, tech was not necessarily where it's at as of today. AT&T, General Motors, GE are very different companies today than they were back in 85. But at 251 billion in market cap, the top 10 companies were about 20% of the total S&P 500. If we shift to 1995, though, we can see a lot of those companies do carry over, are in the green. IBM, Royal Dutch, Exxon, AT&T, GE. But now we've got a new set of players. P&G, Merck, Walmart, Altria, Coca-Cola. They come on the scene and a couple of companies fall away from the top 10. DuPont, Kodak are a couple of them. And so in 1995, we're at 597 billion in market cap, so much higher market cap, slightly less in concentration. We slide over to 2005. Now we've been through the tech boom and dot-com bubble, but a bunch of new names come on the scene. Now we still have IBM, Exxon, and GE are in the mix, but now we've got Microsoft, Citigroup, Pfizer, Bank of America, Johnson & Johnson, AIG. So now we've got our first look at financials or insurance companies now are entering the Big 10. Exxon, GE, IBM still holding their spots. But as we can see, the market dynamics are shifting. Individual names are shifting. Individual areas of the market are becoming larger and more popular. Now, the concentration does tick up above 20%, but the market cap now has jumped quite a bit from almost 600 billion. Now we're at 2.3 trillion, right? So we're jumping quite a bit in size of market cap. Now, fast forward. Now we're going back to 2015. In the dark blue, new names are coming on board: Chevron, J.P. Morgan, Wells Fargo, Berkshire Hathaway. Again, one energy company, but again, a bunch of new large financial conglomerates. Johnson & Johnson, Microsoft still stay, but now we've got our first huge introduction of Apple, which now jumps on. Going to 2025, Apple stays, but now we can see these are where those names are very, very fresh in everyone's mind. NVIDIA, Microsoft, Amazon, Alphabet, Meta, Tesla, Broadcom, JP Morgan, Berkshire are still there. And so when we look at this chart, although it's really, really interesting to see the shift in not only individual names, but also individual industries as they become shift in and out and more popular, the big takeaway is looking forward, we don't necessarily know who are going to be in the, in the Big 10 or the largest 10 going forward. And it just like people back then didn't know, looking backwards, how the dynamics of the market would shift, and also who are going to be the big players. A lot of the big players from 2025 weren't even in existence, and it just shows you we don't know what's going to be happening in the future. If your investment strategy was just to buy the biggest 10 names and hold them for the next decade, that worked sometimes, but for the most part, a lot of the names did not last the next decade. Now, I'm not saying the 10 names that we have now aren't going to last. They're huge change going on in the market right now. But it just goes to show how difficult it is to pick the individual names of those companies and get it right consistently. And so overall, you can, get away from single concentration risk by broadening your investment strategy or being more diversified. And that's really a major takeaway from this. Now, joking here, but everyone's got a, sister's brother's cousin who invested in Tesla when it was $5 a share and they made a ton of money. That is a very rare case of what happens when you're dealing with individual stocks. Tesla is a great example of a company that skyrocketed early in its existence, but it's gone through substantial pullbacks and downturns before rising to the company that it is today. And so, can you hold on through those rocky periods? Are you convicted in your investment thesis to think that that company is going to rise to one of the 10 biggest? It's very hard to do that. And so, it makes a stronger case to be diversified and be more broad in the market as a long-term strategy. It just shows how difficult it really is to pick and choose the individual names. And so I thought, again, this is a really interesting way of looking at not only the concentration and size that we have going on in the market right now, but how those 10 names or how those big 10 have shifted over the, since 1985, just like it can shift over the next 10 to 20 years. Hopefully you found this chart helpful and you found it as interesting as I did. Please feel free to reach out with any questions. And then until next time, until our next chart of the month, I hope you guys all do well, and we will see you at the next one.